Hey, everybody, and welcome to our knowledge series. I'm really excited to bring you Alex, who is a recruiter. So this is named From the Recruiter's Perspective. I'll say it one more time, from the recruiter's perspective. And I'm just really excited to have you, Alex. You have been in the industry helping us in all kinds of ways as far as research and development over the years. And so I'm curious to kind of pick your brain today. Yes, as a recruiter, but also as just that thought leader in economics and the business of the pump industry. For one, you have that background and have been really helping us determine the best next step. So I feel like we're going to get into that a lot today. But let's just start with the job market and what we all know that it has changed, but what does it really look like, over the last couple years? How has it changed? What does it look like for our manufacturers today? What should they be looking for?
Yeah, I think it's a very important question for people to be asking everyone around them and themselves, Charlie. But first, I want to say thank you for having me. It's a privilege and a pleasure for me to be here talking to all of the wonderful people in the pumps industry. You're obviously regarded as a source of insight and wisdom and wonderful information for many folks. So I feel very privileged to be here sharing the insights that I have since I've joined Miller Resource Group, which, as you mentioned, is a recruitment and talent access firm. I will say that I'm a bit unique relative to my colleagues in the sense that I focus mostly on the analytics and the consulting element of what makes companies successful in the labor market today. And that's the kind of insights I hope to bring to the audience as we go through this series. But to your specific question, how has the job market changed? Well, I think the best way for me to answer is, as usual, with some figures and charts. Everyone loves data, so I'll share my screen here and just share a few very interesting tidbits that I think people should be aware of, because I think that people realize in the back of their minds that things are different, but they don't understand just how different they are and how much need there is for them to evolve and adapt their strategy when it comes to talent, attracting people, hiring people, retaining people in their organizations relative to what we were doing even just before the pandemic. So this latest set of data shows you information from the Bureau of Labor Statistics. That's government data that shows in June of 2022, which is the latest of information we have available here in mid-July. We had 372,000 jobs filled in the United States. If you look at the last 6 to 12 months, on average, we've been somewhere in the high 300s, maybe even north of 400,000 jobs per month that have been filled. And that's really, really different. Prior to the pandemic, we were seeing below 200,000 on average per month. So we're essentially doubled the rate of hiring in the United States. And that really points to the strength of the economic recovery that we've had since that pandemic-driven recession in Q2 of 2020, and the surge in demand for various products and services that we've experienced as the economy has been opening up and as we've learned to live with COVID in this country and around the world. What you'll also see is that the unemployment rate is just a hair above the pre-pandemic low point. So we're at 3.6% right now. In February of 2020, we stood at 3.5%. So just 0.1% difference. And it really goes to highlight the fact that essentially all of the losses in the labor market that happened as a result of that pandemic-driven recession have been wiped out. We're back at the pre-recession level. And that's really encouraging, particularly when you think about the broader economic conversation right now. Many people are using the word recession. They're painting this very scary picture that inflation and interest rate environment is going to drive us into something akin to 2008, 2009, or maybe the severe downturn of 2020. And I just don't see that happening based on the strength of the labor market and several other economic factors that I follow. But it is creating some unique challenges for employers. As you can see here, that the average hourly earnings over the last 12 months across all sorts of different industry sectors in the United States are up more than 5%. Now that's pulled back a little bit. A few months ago, we were at about 5.5%, but it still highlights how different companies are approaching giving raises to their people. It's no longer the 1 to 2% COLA, the cost of living adjustment that we used to see in the pre-pandemic years. It's now this realization on behalf of employers that with inflation being higher and with the job market being so competitive, they need to do more to retain their employees. And as you can see here, we're quite elevated in terms of the compensation increases that we've seen over the last year. I expect that this is likely going to continue for at least the foreseeable future because, as I'll show you in just a second, we don't see the situation changing dramatically from being a candidate-driven market to an employer-driven market, at least not over the next year or so. So as we break down some of these numbers, what you'll be able to tell is that different elements of the economic landscape are benefiting to different extents. So we'll take a look at this 372,000 job gains for the month of June and break that down by different sectors. So here you can see kind of some of the top drivers of that figure. The vast majority of those jobs are being added in what I call frontline industries. So these are sectors where people engage directly with other human beings. So education and health services, healthcare and social assistance, leisure and hospitality. That's been a big driver of this job recovery in the United States as we've opened up, as people have started going on vacation again and taking trips and going to see the national parks. But other segments of the economy that are not people-facing are also seeing some very healthy momentum. So transportation and warehousing added over 35,000 jobs in June. Manufacturing added almost 30,000 jobs in June, and construction added another 13,000. And that's really encouraging to see that this is benefiting the entirety of the labor market landscape, and it's not just being driven by those frontline sectors, as I mentioned earlier. That if you look at manufacturing, the fact that we added 30,000 jobs in manufacturing is definitely a positive sign and shows that those folks that say that manufacturing is dead in America, that it's all been outsourced, they simply don't have the right perspective on things. But at the same time, I think it's important to look at the flip side of the coin as well. So when you talk about 30,000 jobs added in manufacturing, you have to bring that to the context of there are currently more than 800,000 open positions in the manufacturing sector. And so that's less than 5% of the job openings that we have in manufacturing that we actually filled in the month of June. So it really puts things into perspective a little bit more. But in broader terms, I think it's really important to highlight that the level of job openings across the entire industrial and consumer landscape right now is at such staggering numbers that we've really truly never seen something like this before. So what you can see in this chart is the data history of monthly job openings going all the way back to the year 2001. So it's really a nice 20-year comprehensive holistic picture of what's been going on. What you'll notice here, and I don't know if you can see my mouse cursor, but historically, pre-pandemic, job openings typically kind of oscillate between 2 and 8 million at any given time. You can see here in the 2001, the post-recession period there, it fell to as low as 2 million and then rose to about nearly 8 million back in 2017 and 2018 when we first started talking about, wow, this is a really tight labor market. I can't find employees for my companies. And then as a result of the pandemic-driven recession, we definitely saw a decline here as companies first laid off people and then put hiring freezes in place. But the rebound that we've seen since then is really nothing short of amazing. And you can see how different it is to have over 11 million open positions right now available in the United States. And it really puts some context around this term, candidate-driven market. Companies are hungry for workers and they simply can't find them. So that's why so much power currently rests with the candidates. Now, I think that it's important to highlight that there are two key elements that are driving these record high job opening numbers. The first one is the accelerated retirement of the baby boomers. And we really saw that tick up in 2021. In particular, people were tired. The pandemic presented some real challenges for those in the later stages of their careers. And it coincided with a period where the equity markets were completely in record territory. They were off the charts. So you have people that are in late stage careers, their retirement portfolios are flush with cash because the stock market was doing really, really well at the time. And they just decided to take the early buyout. They decided to, I'm going to go and enjoy my retirement years a few years early, and I have the money to do so. So that's what I'm going to do. So that created this gap that exists because not enough young people are coming into the market to account for this acceleration in the rate of baby boomer retirements. The other element at play here is entrepreneurism. And what we saw during the pandemic is that business formation, particularly new businesses on the smaller side in the United States, was happening at double the rate that it happened prior to the onset of the pandemic. Typically, people that are risk averse won't go out and start their own businesses, but we were dealing with so much uncertainty, so much unpredictable momentum in the economic landscape that most people said, you know what, if not now, when? I'm going to go ahead and give this a shot. They left their positions with well-established companies, and they started businesses on their own. And so not only are they leaving job openings behind, but they're actually creating new job openings for the businesses that they're forming. So it's almost like a double whammy in that sense. And that's a large driver. It's not the only factors, but those two things, the retirement of the baby boomers a few years early and a doubling of new business formation in the United States, is largely responsible for the surge and essentially the 3 to 4 million extra job openings that exist in the economy right now. Now you can see we're definitely starting to slow, and perhaps we're starting to see the beginning of a declining trend. But when you compare this number to the number of people looking for work right now, which stands at just over 6 million, you can see that there's a huge chasm that exists, and these 5 million unaccounted for positions are going to continue to facilitate, in my opinion, a job market that favors the candidate over the employer. So it's really interesting to think about it in the sense that it has changed dramatically as a result of the pandemic. And also, even with a slowing economy, unless we get a severe economic recession, which most people don't expect right now, I myself being one of them, even if the gap between the 6 million people looking for work and the 11 million open positions does close some, it's still not going to be enough to really make kind of a flipping of the coin in regards to employers being in power once again. Another really interesting way to look at all of this is by looking at a ratio of the number of unemployed per job opening. And so this is basically taking that data that I showed you in the previous slide and looking at how many people are available for every open position. You can see right now that number is at just 0.5. So in simpler terms, there are almost twice the number of job openings as there are people looking for work. And historically, it's actually a really interesting thing to contemplate because if you look here, this is taking that ratio, the 0.5 where we're at right now, and plotting it once again as a line over time. So if you go back to the pre-Great Recession timeframe, that ratio hovered around 1.5 or so. That means that for every open position, there were 1.5 people looking for work. So that is a market that favors the employer. Then we, of course, had the onset of the Great Recession, a bunch of layoffs. And at some point in 2009, we had nearly 7 people available for every job opening that we had in the United States. As we started to recover from that recession, that number gradually came down and settled right around that 1.5 mark once again in the 2016-2017 timeframe. And then something really changed. And I think that the beginnings of the retirement of the baby boomer generation were clearly visible here. You can see it started to decline. And eventually in 2018 and 2019, it actually fell below 1. So that's when you started to hear the talk of, my gosh, where are all the people? I have all these job openings and I can't find people to fill them. Well, this is a large part of that. The pandemic certainly upended things for a short period of time, but then it came back down almost as quickly as it increased. And you can see right now, we're actually at the lowest level that we've been since the pre-Great Recession period. So if you are listening to this and you feel like this is the most challenging time that you've ever had in hiring people for your openings, here's why. The data supports what you're living day to day. So it's really important to understand just how different things are, and not just from a supply and demand perspective. There are many other changes that have gone on in the labor market and in the economic environment that are making it so difficult for companies and for HR managers and HR departments all across the country to deal with the new reality of the world of work. You can see we talk about the labor supply that I just covered with you, but how about this hybrid and remote work issue? This has been an absolutely fascinating thing to watch unfold over the last 2 years. Prior to the pandemic, on average, if you looked at Monster or Indeed or LinkedIn, less than 5% of all positions were offering remote capabilities. Right now, that number is closer to 30%. And so people have so much choice in terms of the kind of work that they do, where they do the work from, that they have the ability to say, you know what, I'm not happy here. I have all of these opportunities available to me. I'm going to go ahead and explore them. And that's exactly why we have things like the Great Resignation or the Great Reshuffle, or whatever you want to call the phenomenon that involves people leaving companies that they've been with for years and going to seek other opportunities somewhere else. We also have this unending pandemic that continues to be a part of our lives. As much as I would like to say that it's now in the past, the reality is right now we're in July of 2022. The BA.5 variant has just become the most predominant strain in the United States. It is, once again, the most infectious that it's ever been. It's infecting people that had Omicron earlier this spring. And so it's going to continue to impact the world of work. People are going to continue to have to call in sick when they test positive, and they'll have to continue to call in sick when their kids test positive at school and they can't find daycare options. And so this is creating an ongoing challenge for companies with employees, particularly blue-collar employees that can't do their work remotely and that have to be on the production line, on the factory floor, making the things that the companies are selling. So this is going to be an ongoing challenge. And I touched on this earlier, but wages and inflation, the spiral of rising costs for businesses and having to pass on the rise in costs, both on the material side and on the people side, onto their customers. We're not quite through that yet. I do expect inflation to come down off of the scorching 9.1% that we had on the CPI, or the Consumer Price Index, for the month of June, but it's not going to go back down to the pre-pandemic below 2 level. We're probably going to settle somewhere between 3 and 5% as the new norm of inflation in this country, and that's going to present challenges for businesses as well. So when you think about all of these things, it really strikes me as odd that most businesses, when they get together with their management teams, typically in the fall, to set revenue targets or market share goals or whatever it is that they're strategizing for, they talk about their market, they talk about the product, but very few organizations talk about the people, right? That's largely left to HR departments to figure out. So to pursue this kind of line of thought, I actually recently did a survey, and I was just blown away by what the results said. So we have a database at Miller Research Group of thousands upon thousands of companies that we've worked with over the last 50 years and tens of thousands of candidates. And we asked those companies, well, do you actually have a comprehensive talent-oriented strategy that involves senior management team members talking about not only what's happening right now, but how do you become more attractive to talent? What do you do in terms of best-in-class hiring practices? And really putting in place the resources and the attention necessary from the decision makers of the business to drive this forward. And as you can see here, the results are not very encouraging. Only 27% said that yes, they do have a talent strategy, and 73% said that they did not have one. Now, the encouraging here, the point is that some of them, and I would say the vast majority of those that don't have it, are working on it. They recognize the need for this. But I can tell you, if you're one of the companies that is in that 9% category, that you think you're fine without one, you are wrong. I'm sorry, you are wrong, and you're going to get left farther and farther behind. So let this be a call to action for all of you. Understand The market and the labor conditions that you are operating in today are so drastically different than even a couple of years ago that you have to get involved, that you have to be willing and able to allocate resources, time, and people's energy to developing and constantly improving a talent strategy for your organization that will bring new recruits in, have them go through a effective and efficient hiring process, and give them reasons to stay with your organization, not just for the short term, but for the long term as well. So I know that that's kind of a long-winded answer to your question, but I hope it gives people a better understanding of how things are unfolding in the labor market right now.
Absolutely. Thank you so much, Alex. And it does, I love that question. Do you have a talent strategy? Well, we should all be asking ourselves to re-look at our talent strategy, even if we have one. So I think this is really just setting the stage. So don't worry if you don't have one and you are working on one. We're going to continue to talk about this. So Alex, this is just the start of our series together. And I think it was a great way to just, say, okay, this is where we are. And these are the challenges that we have. Now, what are we going to do? And I think that you've laid that out really nicely for us to continue this series.
Absolutely. And I look forward to the next few episodes where I can really get into the details and provide you with some actionable and practical advice so that you can get better at your talent strategy.